Hey everyone, welcome back to another edition of Super Prime UK with your Super Prime valuation specialist, myself, Rob Cohen.
And myself, James Wild.
Hope you're all well, hope you've all had a good week, hope you're managing the strike action as best possible in these challenging conditions and times that we face week on, week out. Action-packed show again for you today, great intel, data and updates from James, along with later in the show an exciting new show that we'll be launching in a few weeks' time via EVA, the European Valuers Alliance international show coming up. I will let you know more information on that later in the show. James, all good?
Yeah, all good, thanks, Rob. Yeah, fresh on my cycle in on the Santander bike. But just in terms of the data for this week, pretty positive this week, Rob, in terms of some of the data stats we've got, particularly new instructions up to 367 this week. So obviously that's well above the average from what we've seen certainly in the early part of the year, while sold figures up at 169 for this week. So that's again very positive, Rob, as we sort of move into the summer months, whilst under offers 201 for this week, which is also very positive. It gives a good pipeline for the coming weeks in terms of those under offers coming through to fruition and transacting as sold properties.
Yeah, fascinating data. And I think everyone is just waiting for that data to either stall or decline. And as we see that the market just keeps giving, it's a real battle of fiscal and economic policy that's challenging the market conditions. But the data that we're getting through, and just us as a valuation practice, with the amount of live transactions that are taking place, as well as the refinance market, there isn't any dramatic slowdown yet. And at the same time, we're faced with some very challenging economic conditions.
Yeah, I think this year particularly the London market has remained remarkably robust. Obviously the sales volumes aren't quite what they were last year, with record-breaking year month on month, and obviously we had the stamp duty holiday up to 500,000 as well, which was really fueling the market there, and obviously prior to the interest rate rises. So it's obviously like a perfect storm for many buyers and the race for space there. But like we said, Rob, the main message is that the market here in London is remaining very robust at the moment. Fall throughs this week at only 59, which is again quite a positive figure, especially after last week we had the interest rate rise in the base rate up to 1.25%. So we've got the mortgage market now sort of readjusting itself once again to this higher base rate, and it's been happening over the course of the last quarter or so, but many buyers, we're hearing, if they've got their AIP, their agreement in principle, all sorted, if this is to expire due to the length of some of the transactions that they're taking, mortgage products are continuing to be removed from the market and placed with sort of their updated products with their new rates as a result of the base rate rises. We're seeing here, if there's a protracted period whereby people have got properties under offer and they're quite high LTV, some buyers are struggling to then get the sort of matched mortgage product when the new rates come in, Rob.
Yeah, there's definitely going to be a tipping point. As you alluded to on last week's show, interest rates further increased, and the question is really, which everyone in banking and finance and lending and property and sales wants to know, is how many more interest rate hikes can the market deal with? How robust is that pool of buyers, that demand and supply equilibrium? How many more hikes can the market deal with before it has a major impact? And I think that's the question mark on some of the examples you've just raised are where some deals have fallen by the wayside. And I think sooner rather than later, we could hit a tipping point.
Definitely, and some of those buyers at the high LTVs are just tipping over the affordability threshold, and their borrowing amounts can be slightly reduced there, and it just depends if the same LTV products are then made available on the new rates there. So something to watch this space, something that's happening sort of across the country, more sort of a regional scale than here in London, I would say, from what I'm seeing in the market. And as Rob said, the Bank of England, their primary objective at the moment is to get inflation under control, which they're doing by increasing the interest rates, which are due to increase to 2.5% by summer 2023. And it's just a case of keeping the UK out of recession whilst slowly raising those interest rates up to curb and dampen the inflation. Just in terms of some other news, Rob, in terms of some of the other sectors, cost of living has obviously been a hugely topical in the last 2 quarters. And then we've just had some of the long bank holiday weekends. Now, easyJet have announced that they've actually, to avoid further disruptions, and there's been massive disruptions in your sort of Stansted and Gatwick airports, some of the London airports being massively affected. They've actually reduced some of their scheduled flights for the rest of the summer, and they're blaming obviously the staff shortages at some of the airports, and as a result of that they're citing Brexit and the sort of constrained labour force on that. I think it's going to be a positive summer for some of the British seaside towns, resorts, more domestic holidays, Rob, as we saw in 2020. Some of those sort of market towns were able to thrive there. Yeah,
absolutely. I think, as we discussed in last week's show, the battering that the pound has taken against the dollar and the euro is going to have an impact on overseas travel, and following on from the domestic tourist market going from strength to strength during the COVID years, I foresee another strong summer in the UK, and as long as the weather holds up and is good, I think it could be great news for the seaside towns in the UK.
Yeah, let's hope for some more heat waves. In terms of the retail here in the UK, it's quite big news actually, Rob. We've spoken before about Primark not being on this sort of online sales. Well, they're going to trial a new click and collect system here in the UK. The high street retailer is going to launch 25 stores across the northwest of England, is mainly where they're going to be focusing by the end of the year. And it's going to be offering mainly children's clothing, household items and accessories. And the main rationale there is to draw more people into their stores, which are seeing sort of slightly less footfall, I believe, in the northwest of England. But obviously a big move for them, Rob. It's something they haven't done in the past. Any sort of reaction to that?
Yeah, I just find it so interesting that Primark are the last mover to the online market. They obviously have a very strong strategic team, and there's a big reason why they're behaving the way that they are. It would just be so interesting in 5 to 10 years to understand whether their strategy pays off or they feel like they've missed a trick and been left behind. Their high street presence is phenomenal. They get tremendous footfall because of this policy. So it would just be, it's just so interesting to follow how they trade and how they perform.
Yeah, like you say, Rob, amazing high street presence, but in terms of online, sort of quite a limited sort of profile. It's mainly used in the past as to preview some of their new styles, new lines of clothing, more than be able to purchase in the past. More recently, they've been able to give buyers indication of stock levels in certain stores, but now it'll be more up to about 2,000 items, I believe, and you'll be able to click and collect those in store. Just a sort of slight concern which Primark are monitoring is also they're closely watching events in China in terms of some of the local lockdowns there affecting some of the factories and ports, which could threaten some of the potential sort of supply chain issues and deliveries of stock. But hopefully they're able to keep their clotheslines fully stocked. The Camden Market came on the market earlier this month with a reported guide price of £1.5 billion. We believe that the investment bank Rothschild is due to be overseeing the sales process there for the 16-acre site in total across sort of 3 main sort of island sites. Includes over, the market well, Rob, but over 1,000 stores, bars, shops, restaurants, cafes. And I just want to ask, what do you think the likely purchaser profile is or likely buyer is for something of that sector, £1.5 billion.
Yeah, I think very much an investment institution, maybe with, I suppose, looking for long-term capital appreciation rather than immediate yield return. I think hoping for strong footfall returns and growth. Maybe someone with a good track record in asset management, someone looking to expand, or someone who wants a good zone 1-ish location with water features and canals. I mean, I just think Camden Market's fascinating. You're right. Very close to home for me, having gone to school in the area, very close to home for you as a local resident living in the area. And, maybe many of the listeners and watchers wouldn't know, but, Camden in the 80s was a inner city slum, not such a safe area to go to. And now it's fully gentrified and gone through a wonderful regeneration, to which Camden Market is up there at the top of that, and it attracts tourists from all over the world. And the ones that do go there, just speaking to a friend the other day who was there, just thought that it was such a beautiful, iconic location. So I do believe the long-term approach from an institution could be a good one there, and I think it has a huge appeal. So let's see what happens with that.
Yeah, I mean, just in terms of the tourist space and the high street, the pavement's absolutely packed. In terms of the local high streets there, offering quite a sort of eclectic mix of stores, shops, and obviously all the sort of variety of tourists and individuals which it attracts. That just the footfall alone, I think, could be the sort of tipping point for an investor, what they're going to look at, and the sort of longevity of people not only visiting that area, but obviously you've got massive high street exposure there. You do have some mixed use in terms of restaurants and cafes, and obviously a small section of residential. So you have got a wide variety of asset types there, which could appeal for someone with maybe a lower risk appetite. They want a sort of a mixed bag of what's encapsulated in that market. So we'll have to watch this space in terms of any sort of entrance to that, anyone that puts themselves forward as a buyer, and whether it trades later this year at all, Rob.
Yeah, absolutely. Thanks to all of you reaching out for a copy of the latest data and intel that we're providing the market with every week. Hopefully all of you watching and listening are getting it. If they're not, please contact me or anyone at MJ Group, just so that you're up to date. So you're getting all the numbers, all of the trackings of the deals and the transactions and the changes as quickly as they're coming on a weekly basis. So please do continue reaching out to me. And as I mentioned earlier in the show, we've got some very exciting news. The European Valuers Alliance, EVA, to which the MJ Group is a part of, have got an exciting new show that we will be launching in a few weeks' time, which is across 11 businesses of independent valuers across Europe, across 15 different countries, representing more than 750 professionals, 40 offices, and valuing 500 billion euros worth of assets. So great organisation that we represent, and we will be updating you on a quarterly basis with a different European market each quarter, and the first show is going live in a few weeks. Very, very highly data and intel backed from all the pan-European companies and countries that are represented. Strongly recommend that you sign up, so subscribe for that so that you can get the data and intel, and we will give you and share with you information in due course. And that's all for this week. Really appreciate all your help and support, backing on the socials. Keep watching, keep listening, keep engaging, and we will keep providing you with the latest property, intel, data, and finance as the market moves so quickly here in Superprime UK. Thanks, everyone. Thanks, James. See you all next week.
Thanks, Rob. Thanks so much, everyone.